Hello, this is Heart of Economy. Today we're asking just one question. Is the CMP heading to 8,000? And if it is, will it make you rich? Or will you be trapped in the biggest bull trap in history? According to David Hunter, this isn't just a rally. This is the final move of a 43-year secular bull market. But what comes after? An 80% crash, he says. So what comes first? Now we begin a detailed analysis. Not just what David says, but why he says it and whether it can really happen. If you're ready, let's begin. David Hunter says, this is a melt-up. Markets are entering extreme overbought territory, but they'll still go higher. S&P 8,000, Nasdaq 27,000, Dow 55,000, Russell 3,300, and maybe even beyond these targets. So, where are the markets today? As of July 15, 2025, S&P 500, 5,660, Nasdaq 19,820, Dow 41,900, Russell 2,000, 2,180, which means to reach David's targets we still need 41% for the S&P, 36% for Nasdaq, 31% for the Dow, 51% for the Russell, and he expects all of this in just 3 months, by the end of summer. This is an extremely bold prediction, but why does he believe this? According to David, markets still hold strong psychological potential. Institutional investors are not fully in the game yet. Everyone remains cautious. The majority of money is still sitting on the sidelines. And that's exactly why this rally will continue. When everyone gives up, the final wave of buying will arrive. That moment will mark the peak, he says. He also believes rates will drop. He expects the Fed to cut rates twice before year-end. Along with that, the dollar will weaken, which would boost corporate profits and trade. In short, he's saying, the economy will slow, but that's not a bad thing, because it will force the Fed to ease, and that will fuel the markets. But how realistic is this scenario? First, let's clarify this. The Fed is currently being very cautious about rate cuts. In its latest statements, the earliest expected rate cut is September 2025. Inflation 3.3%, still well above the 2% target. Dollar index DXY 102, which means it has gained value since the end of 2024. Are institutional investors still cautious? Yes, but capital inflows have accelerated in the past 4 weeks, so they are not completely on the sidelines. The game has already begun. David's claim that the big money hasn't entered yet is partially true but incomplete, because big money already started buying the dip. It's just that aggressive positioning hasn't begun. But is that enough? Can this rally really continue all the way to 8,000? The answer, yes, it might. But this rally is driven by psychology, not fundamentals. What's lifting the market today? Algorithmic buy orders, momentum traders, retail investor FOMO, late but forced institutional entries. In other words, it's not rational, it's psychological. And here's where a crucial concept comes in. The bull trap is that final stretch of the rally when prices are soaring. Everyone's rational, but there are very few exits. Do you know what David Hunter says? At the end of this rally, I expect an 80% bear market. This will be a global bust, everything will collapse. If the S&P reaches 8,000, that means it could drop to as low as 1,600. That's a massive crash. a great reset, and most investors will have entered right at the top. Why 80%? Because according to David, this really marks the end of the 33-year cycle that began in 1982. And when these cycles end, history always brings destruction. That's why David's words carry both opportunity and danger. Opportunity, the rally will continue. Get in, make money. Danger, if you can't get out, your portfolio might evaporate by 80%. So maybe this isn't an investment opportunity, but a chance to prepare your exit plan. Because history always shows us this, the moment everyone turns bullish is the top. The moment everyone panics is the bottom. Today the media, social media, fund managers, Twitter analysts, if they all start saying the same thing, you're likely at the peak. Re-evaluate your position. Act strategically, not emotionally. Move your stop-loss levels higher. Don't let winning positions turn into losses. Every buy opportunity may actually be a chance to sell. Don't forget to take profits. Keep part of your portfolio in cash. Liquidity is your insurance for the crash season. Watch out for fall. September and October historically peak to bottom months. David Hunter's prediction could make you very rich this summer, but the same prediction could wipe you out of the market. This rally might be real, but it must be navigated with data, not emotion. Because never forget, markets reward the patient, not the clever, but they never forgive the impatient. This is Heart of Economic. If you found value in this episode, hit the like button, subscribe, and turn on the notification bell, so you never miss a critical update. We don't bring hype, we bring deep analysis, facts, and what the top economists are really saying before it's all over your feed. Every video is built to help you think smarter, invest wiser, and stay one step ahead of the market noise. Got thoughts or predictions? Drop them in the comments. We read everything. Remember, this isn't just about markets. It's about understanding the real forces shaping your future wealth. Thanks for watching. Stay sharp, stay rational. See you next time.